Hi everyone, welcome to another edition of Big Business Blueprint live interviews, where we speak with one business leader and understand their personal and startup growth playbook, fundraising lessons, products and services they offer, and how they think about their market expansion, customer acquisition, retention, attracting talent, building a tight knit workforce, and so on. I'm Bhuva Shakti, based in New York, and the founder of WalletMax. We are a global community of startups, investors, and executives focused on increasing sustainable funding access, especially in climate tech, fintech, deep tech, and AI sectors. If you're a tech startup, any industry, sector, stage, don't miss out the fundraising mastermind from Wallet Max. It's a 12-week guided sprint for anyone fundraising now or thinking about fundraising sometime this year. We have two coaches every week for real time review of fundraising materials, investor connections, depending on your fitment, and multiple guest speakers who will get you closer to your fundraising goals much faster. Our next cohort starts on May 20th. You can check out the website link scrolling below in the screen. Now, back to where we are today in my Startup Growth Playbook interviews. I typically invite a startup founder or co founder and interview them about their growth lessons. But more importantly, what differentiates them from the crowd? How do they prioritize impact along with profits, people, planet? We deep dive into their personal, professional, and startup journeys and their mission to uplift. Today, we are speaking with Kristina Fahl, the founder and CEO of Shuttlebee, which coordinates smarter risk transfer for student transportation in small groups. Kristina started Shuttlebee after running an award winning student transportation company and watching good operators get priced out by insurance costs that didn't reflect their actual safety records. Before launching Shuttlebee, she led operations at bus.com, scaling a network of thousands of operators across North America and managing logistics for major institutional clients, including a 100 million contract at one of the world's largest airports. Let's get started. Thanks for joining us, Christina, today. Could you share a bit about your background and journey towards launching Shuttlebee?
Absolutely. And thank you so much, Bhuva. It is a pleasure to be here today. Shuttlebee is a company that helps families get their kids to and from school and activities when there's real challenges around doing that. And I started my journey not as a transportation expert, but as a parent who worked in corporate America for 15 years and who struggled with this problem, so much so that it was worth blowing up my career to launch a student transportation company, which I operated for just under 5 years. While we had more work than we knew what to do with, and we had a very strong following with a very strong safety record, we had to shut down because the cost of insuring a minivan was
Mhm.
$10,000 a year. Over
Oh,
time, we expected that number to get better. Unfortunately, it actually got worse. So after several years, I shut down that company, ended up taking roles at venture-backed startups, but came back to this problem, or the problem behind the problem, when I started to meet insurance experts who shed light on how we could build an insurance program specifically designed for smarter risk transfer in this space.
that's perfect. Thanks, Christina. And I know a couple of days back, I also met someone, I don't know if it's coincidental. Their auto insurance also went up because they were involved in a accident where they didn't do anything. Someone else hit someone who hit someone else
Yeah.
that hit this vehicle, and their insurance has gone up for no reason, right? So, unnecessarily not trying to assess risk in the right way than trying to apply a generic algorithm for everyone. Now, you have this first-hand experience thinking that this risk model is broken. So, how did you validate your idea? I mean, how did you find out, okay, many other people also have this kind of a challenge that the risk model is broken for student transformation?
So the very first time I realized this was when it happened to me as a small operator, having run this business for 5 years, and then having the opportunity to talk to a number of operators in student transportation and outside the space. I was able to talk to operators with spotless safety records in non-CDL or commercial vehicles, paying more in premiums than party buses or larger limos, simply because underwriters had no way to tell my business or their business from these other types of businesses. The risk model wasn't broken because it was unfair. It was broken because it was blind to these differences.
Yeah, exactly. Now, where do exactly the traditional insurance models fail in this market? I understand it's a little bit blind, but how does it work in multiple parts of the country? Or is it like the same all over the country?
Yeah, so small vehicle student transportation gets bucketed into commercial auto generally. So if you're livery, if you're logging, if you're paratransit, if you're ice road trucking, especially if you're a small operator who struggles to get insurance, you're all priced the same. This loss data has actually nothing to do with what we do under each of those
Yeah.
umbrellas. So because there's no segment-specific actuarial baseline, no telematics standards, any vehicle that's 15 passengers or less won't get credit for great operational controls using telematics, or taking steps to actually move the needle on that loss curve.
Yeah, that's right. And then, is it true that I'm understanding it that the categorization itself is incorrect to start with, so that you don't get the necessary credits?
Yeah. So the segmentation is based on things like years in service and fleet size. In many instances, it's not even based in driver data or driver
Oh,
history.
yeah, exactly. So, apart from this data, what other data actually reflects real safety, and what is being overweighted today or underweighted today in this sector?
Yeah, so things that are overrated are things like garaging zip code, where the vehicle is
Mm.
housed, vehicle count, and fleet size. These are the primary factors that drive those premiums. Things that are underweighted or just not collected at all, route consistency, harsh event frequency. In our business, parent handoff, and if that's being handled appropriately, child presence protocols, clearances, and compliance, driver tenure. These are all signals that predict loss at the operational level, and no one is pulling them in for pricing.
Yeah, and this is the same not only in this sector but many other sectors, right? Sometimes it's not the data is incorrect, but data is not available or not used when it has to be really used. Now, as of today, do you know if this data exists and it's not being used, or sometimes we don't even have the data and we need a little bit of a more deeper understanding of how to get this data in before we start using it?
So there is a tremendous amount of data that's not being pulled in to commercial auto insurance today.
Mm.
So personal auto insurance is based on credit score, and if you enroll in a telematics program, your telematics, that's starting to be used. So we're taking a lot of the discipline that's used in personal auto and applying it to commercial auto. But as a company putting transportation operations and insurance under the same umbrella, we have another layer of data that's proprietary that we can use to even further compartmentalize those segments.
Got it. And are these more in local communities? Do you do short trips, long trips? Are you mostly in and around the school zone? How does it work?
So the standard service that we start off with in a beachhead environment is to and from school and activities. It's consistent routes. It's typically booked for duration, whether it's a season or for the year. And it's built for consistency so that operators can build up their own network and business that way. After an operator is established, they have an opportunity to take on additional work beyond that. But the bread and butter in our work is working through the consistent needs of students and combining those needs into small pools, similar to the bus, but just in a non-commercial vehicle.
Yeah, and in these scenarios, many times it's not even about the vehicle, it's about the operator, the trust and the connection and the transparency and the safety of the student itself, right? Not necessarily about the vehicle.
We're ensuring the operator, the procedures, the compliance, the handoff. We're looking at the holistic picture.
Yeah, that's perfect. And now, in the current system, I understand the insurance costs are a little bit higher. How else do good operators get penalized? I mean, apart from insurance costs, do they have challenges procuring new business, new grants, new loans, new vehicles, anything like that?
Absolutely. Absolutely. In fact, these operators struggle to become bankable for all the reasons you just stated. They're rated against the worst actor in their class. They don't
Okay.
they don't get credit for investing in driver vetting and driver training and dash cams. And because their premium volume is small, brokers don't have the leverage to fight for them. So they basically get whatever quote is spit out of the market.
Got it. Yeah, very rightly said. Like benchmarking against the worst driver is not going to give you any credits how much ever you try to do better, right?
Yeah.
Now, apart from local neighborhoods, maybe statewide, nationwide, how big is this inefficiency and who feels it most across the ecosystem apart from the operators? I'd say parents also have a challenge.
Parents are the primary driver of the pain. Without parents needing transportation for their students, there would be no need for this service. But more and more, what happens is small operators are paying up to 6 times more what their actual loss experience would justify. So insurance exit their segments, and as a result,
Mm,
people that feel it are the families who don't have transportation services, and they lose out on transportation entirely. So by opening up the market, we can introduce operators to serve this work and unlock an entire market of supply.
And why wouldn't some parents use the school bus or public transport available?
Yeah, so that question varies quite a bit by each locality. Some parents aren't served by school buses. Typically,
Mm,
urban areas, students may not get service if they live a mile and a half away, but a mile and a half still presents a number of logistical challenges. School choice does introduce some complexity where parents are choosing a charter school or a non neighborhood school where that school isn't required to provide service. And then simply the inefficiency of it all. We've seen school districts pay for a yellow bus to transport one student. We know that efficiency matters, and those smaller routes can be managed better from a capital and efficiency perspective. So lots of use cases, especially as aftercare programs open up and parents need full coverage past the school day. For all these reasons, we found that parents have a ton of interest in helping close the transportation gap.
yeah, after school programs are also very important, right? So because parents' work day could be slightly different from the school day and things of that sort. So how is Shuttlebee doing this differently to price and transfer risk more accurately?
Yeah, so we're aggregating the segment so it is underwritable based on the information that we know. We're covering transportation and operations under the same umbrella, and we're putting a predict and prevent layer beneath it. So we're not just being reactive to risk like a standard insurance company, we're becoming proactive as well. So we talked about this before, but because we underwrite the entire activity, not just the vehicle, that is how we manage smarter risk transfer.
Got it. So the end-to-end considering additional and lot of parameters. So in this case, you might potentially have some competition from the traditional insurers in wherever you're operating at the moment, right? So what happens in that scenario? What are the pros and cons with this competition from the traditional players in your local neighborhood?
Yeah, so at the early stage, we typically have found customers who there's a desert where they're not currently served. So
Mm,
sure. and a number of commercial auto insurance specifically have carve-outs for student transportation, where they've made the active decision not to cover passenger activity when a student is involved. So for that reason, there's lots of opportunity. Happy to discuss that layer of competition when we get there. I'm excited to do that. But at least initially, we're going where the greatest demand is in the early adopters who currently are unserved today.
Perfect. And do you have support from schools, or they are kind of more neutral or not so supportive? How does the school work with you or take this alternate transportation?
Yeah, so I'll give the vaguest answer possible and say it depends. So there are schools that use transportation as part of their brand. They're looking to deliver that white glove experience. It's very important for them to partner with a provider who can deliver on that. So
Mm.
that's one approach. But then other schools, they're not transportation experts, nor do they want to be. This is an activity they prefer to fully outsource. So our ability to contract directly with parents, with a school's guidance and blessing, has unlocks a different type of relationship that lowers the administrative burden on a school's administrative team while opening up the door for us to serve families directly. So for that reason, it does depend, but we've tried to be flexible with the business model.
Yeah, so sometimes schools may find it more beneficial for their brand providing this kind of service. Okay, so schools
Right.
might also be helpful. So, what unique signals or data signals that Shuttlebee unlocks that potentially others can also leverage, or is it more in a nascent stage at the moment, the data signals that you unlock to enhance this service?
So what's interesting is we're collecting so much data. Time will tell what the behavioral triggers are that are leading indicators of loss identification or mitigation. We can use NPS scores as an indicator. We
Mm.
can use stop time. We can use adherence to a specified route or just the ability to be on time. There's so many factors that we can pull out of this data and use in a layered approach. And I think what's going to happen is the factors that are used for underwriting today traditionally will become background factors where they're not the leading indicators of risk going forward, and we'll be able to concatenate new variations of this larger pool of data we can collect from transportation operations.
Yeah, and this data, I mean, how do you collect, and do you have a private data source? Do you also mix it with other open and public data sources? So is this more proprietary data? Could you help us understand a little bit about that?
Yeah, so the first few years will be about data collection. It is proprietary in that nobody is collecting it and aggregating it in this particular way. And of course, we are using leading tools that are being used to support the trucker space. We have a philosophy of not rebuilding what's already amazing. So it's a combination of proprietary tools, existing tools, and aggregating them together to understand what are the primary factors and how do we prevent risk in real time.
And do you have AI as part of this mix? Do you have a proprietary model around that?
Yeah, so we absolutely have AI in the mix, and it started off as since having built Shuttlebee 1 in pre-AI hard mode. Step one was just simply building everything I wish I could have built the first time, but now we're going a bit, well beyond that. We absolutely anticipate taking the data and building models from it. But I think first step in operational land is to observe and see what works. So we're excited to see those prevention and business continuity plans work and collect data from there.
So, what's your first launch market?
So we'll be launching first in Philadelphia, where Shuttlebee 1 operated in the beginning. re- you know, Bringing up those existing relationships and building off of that current goodwill was was low-hanging fruit for us, but we've quickly gotten traction in 2 other markets in Maryland and North Carolina, where I now live. So we feel like that's a nice, robust, very varied geographic segment of different types of markets. So we'll be watching very closely to see how to address each one in its own unique way.
Yeah, and these are very diverse markets, so you'll have a good feel of how it works, and maybe a lot of lessons that will be learned to enhance your solution, right?
Absolutely. Yes.
So, who's your first customer? Is it the operator, the insurer, or the institution?
I I think about this a lot. So the institution creates demand, right? Whether it's the
Mm,
school or the activity or the camp. But really, our first customer is the parent, right? Without the parent, there would be no service needed. And um, in most marketplace type scenarios, where taught from a business school perspective to market supply first, then demand.
yeah.
Our first validation step is to make sure demand exists and it exists to the level that we expect it to in a new market. But ultimately, the institution is what helps us kick off the flywheel
Mm.
and get the first set of communications to interested parents going.
Got it. Now, building a marketplace is obviously difficult, especially you're trying to offer this solution as an alternate to the traditional insurance that's out there. Now, how do you build trust with both operators and insurers at the same time?
Yeah, I it's it we've given it a good bit of thought. I think with ins- with operators, we build trust with transparency, with being concise, with our expectations and our compliance program, with delivering clear expectations and no surprises at renewals. And I think building trust with insurers is about actuarial discipline.
Mm,
A chance to brag on co-founder Somil Jain, who's an FCAS and MAA, and these are letters that have hold high regard in the insurance community. He's also built telematics programs from Greenfield in the auto space at Plymouth Rock and at Steadily. So your expertise with this subject matter, with a deep understanding of it, has built trust with insurers, and then having a captive structure that aligns the incentives with
mm.
structured data, loss data. So we're building that as we go, but it's based on the historicals that we've seen in the market.
Got it. And expertise and operational experience and lessons from the ground, they're all great combinations for a startup to grow and expand. Now, as you grow, are you more about just savings, or will you be changing or altering your pricing model as you grow so that you can unlock more expansion in the sense you can leverage that capital to expand into more cities? I mean, there is always this challenge, cost savings versus growth and revenue numbers.
Yeah. So our first premise is that we make lowering risk profitable. So by being simplistic, overly simplistic with our pricing to start, we felt like that would give us a good baseline. And I think as part of growth, we will need to use that data to introduce much more sophistication into our pricing, so that we're making sure we're not exceeding the willingness to pay, but then operators are well compensated, better compensated than market in this space. So absolutely, we'll be looking to pricing experts to provide guidance as we move into our growth stages.
Yeah, no, the pricing conversation is always a tricky one, especially also here we are talking about parents, children, and economy and the local neighborhood. So many things determine the factor beyond
Yeah.
just what your solution offers, right? Now, you've been in corporate America, you're a parent, you've done this before, you're trying to do this better this time,
Mhm.
and for a huge mission and purpose. So, what are some lessons you've learned along the way? what's one success and one failure that you want to share and some lessons?
So, one failure was solving the wrong problem. At
Mm,
Shuttlebee 1, I felt strongly that delivering operational excellence would be enough, right? If we build a good model and we had strong drivers and we paid them at market, that would be enough to grow our market. But without securing the insurance um, problem, without really bringing those costs in line with what competitors were paying, we did not have a path to scale. So really incorrectly assessing the real challenge and the first time around, I would say was a huge learning lesson that I took away. So one success I would say is being open to restarting a business I shut down. No
it's
part
a
of me
huge thing.
no part of me ever. I mean, I closed down email addresses, I shredded documents. I mean, there was no trace of this former company except in the IRS's archives. So, but getting connected sort of serendipitously to the experts who could help advance the cause over time convinced me that this was an opportunity I couldn't walk away from. And I'm just grateful for being open to that and sort of getting past the initial failure of having shut down a company.
Yeah, that's always a big challenge. And today, many founders think that they want to launch a startup, it's going to get customer and revenue traction, and they're going to make 2x, 3x in like couple of years, get VC money. But that's not how it happens really on the ground, is it?
It is not. And I think as much as you hear the data around your success rate, you
Mhm.
believe you're the exception. I think you have to as a founder, right?
Yeah.
But the more you can add experience, front load experience in your favor, the more realistic it feels to at least get to the next level. So
Yeah, yeah. And are there any communities, resources, advisors, mentors that you rely on this journey apart from your co-founder and the team that you work with day to day?
I I am going to not I'm going to fail and not mention everyone I should. So let me try and pick a few. I would not be here without an enormous network of people who have offered their time, wisdom, guidance, and tough love. Um, I moved to North Carolina, and I have been extremely supported by the NC IDEA ecosystem and the Asheville Elevate system. These are ecosystems who know that entrepreneurialism is a civic duty. Those are not my
Mm.
words. I stole them from someone. And deeply entrenched in helping founders succeed. So when I left the Philadelphia community, who I also heavily relied on, I was not sure if I would find that again, but it's very different. But I've been very well supported by many of those groups, also the RevTech Lab Accelerator out in Charlotte. So those three North Carolina entities have combined forces to create one big safety net of experience. But then also having graduated the 10,000 Small Businesses program at Goldman Sachs, I went through, as a military spouse, the Bunker Labs program, as part of the Veterans and Residents program, a program designed to help founders really level up their game. So just a number of programs, accelerators, groups. There's a couple of Philadelphia groups that still meet regularly. So again, I wouldn't be here if I weren't supported by tens, if not hundreds of people in our corner actively working to push this mission forward.
Yeah, exactly. I mean, a lot of founders think that they have to do it alone, but we don't have to do it alone, right? We can rely on communities and resources. And even if you don't need anything materially, the support, the encouragement, and being there for each other is a great thing. And then when you really have to fundraise or go out, capture clients or partners, you already have so many people who are in your network that can easily support you. Obviously it's not going to be transactional, right? So it's mutually giving and asking for things. So that's, I think, one thing that's a lost art, where networking has become sometimes more transactional, where you ask but not give, trying to build those connections, human relationships, before you can, mutually help each other. So glad that you have a good community and resource group going on. Now, what needs to be true for your model to move from early traction to repeatable scale? I believe at some point you want to make this more repeatable and scale across different markets in US and elsewhere, right? So what needs to be true for that to happen?
Yeah, so three things need to be true. First, our loss experience has to validate the underwriting thesis. This is really important. We're making a bold bet that operational excellence, strong vetting, telematics, loss prevention matters when it comes to loss, and we need to prove out that thesis. Second, our insurance program has to capitalize on schedule. We are in a timeline to be able to get in market this fall. So we're looking to finalize our first raise to bring that to market. But then finally, our operator onboarding has to be standardized enough. Every regulatory space, every locality has their own twist on transportation activities. So we need to build something robust enough that it covers enough of a standard that the individual nuances don't encourage an entire rebuild. So no pressure, you know.
So, I mean, great goals, but for someone who doesn't know what does telematics mean, do you
Oh,
want to explain to our audience what does it mean and why is it really important in what you're doing?
yeah. So just like smartphones have evolved from a flip thing that you tap 3 times to get a letter to this computer that's arguably smarter than the computer you might be using for your workday, telematics are the equipment, the hardware and software components. It's equipment that goes in your vehicle typically, though there are some models that work on cell phones. But for the most part, it's hardware you put in your vehicle that can collect data from your driving activity, from the vehicle itself, and then transmit that data to analytics tools who can parse that data, send alerts, score that data, manipulate it in any way you'd like to see based on the behaviors you're looking to evaluate. So it's really powerful tools, and in insurance, it's used in a reactive way for pricing. So they'll collect the data and then they'll use it for pricing, but we're going to use it in a proactive way as well to actually lower risks from the transportation operations perspective. So hopefully we're getting in front of losses so they don't occur at the same frequency.
Yeah, and it's going to be real time, less error prone. There is no chance for missing data. You have all the data when you need, how you need, so you can
Yeah.
process it. Now, there is so much talk about regulations and compliance, especially in the insurance sector, especially when it shapes some of the product decisions in a high liability market like yours, right? So,
Yeah.
how do you balance that? I mean, do you do everything perfectly, launch, or do you kind of take it as you go? I mean, it's a very huge battle, right?
Yeah. So compliance is our product. And by understanding every regulatory landscape, there's some legal costs to that. There's sometimes some lobbying that needs to be done. And it's activities that small operators may not be able to manage on their own. So by creating that compliance structure and requiring that compliance structure, you can't onboard with us, whether you're an operator or a driver who works for an operator, without completing all those evaluations. We de-risk the individual program where a school is unlikely to look under the hood of their transportation provider and check their credentials. And there's
Yeah.
actually been a number of challenges at the state level where school districts have engaged companies who may not have completed their compliance program. So by making this transparent, by using a lot of AI, and by making it so it's impossible to work through the system without completing the steps, you do pull a lot of the risk out and lower the lift for the small operators.
Yeah, exactly. Now that you've come up with this innovative solution, let's say if traditional insurances want to partner with you, want to collaborate with you, is that something you have in mind along the way?
Absolutely. In fact, we've started those conversations. We see part of the predict and prevent layer as being useful in captive markets specifically, where those markets are real sensitive to loss. We
Yeah.
think we can bring the information we're building in our space to others, whether it's passenger data or commercial activity with no passengers. So we've had conversations. My email address is on my LinkedIn. I'm open to it, but we're starting to really kind of widen the landscape on where we think we can take this next.
Yeah, exactly. Now, when you launch between different markets, let's say between Philadelphia and Maryland and North Carolina, so is there anything that you have to do differently, or is it like build it once and deploy it with slight tweaks? I mean, are there major shifts between launching in different markets, or is it really easy to take it to any new market?
I would say it's somewhere in the middle. We
Mm,
picked we've chosen a model that is a bit older.
mm,
Meaning it existed before ride shares or transportation network companies came into play, which means it's a little more resilient, but then a little longer of a onboarding period. It takes a little longer to get started. But we chose that approach because we knew it would more likely have a nationwide stretch, where some of the more experimental programs either have regulatory gray area or they're not tested. So we made that approach. But having said that, every locality is different. So state from the state level to the federal level to sometimes the county level. It's important to know what you're working with, and I think as we expand into more areas, we'll be able to expand what we're incorporating into the program.
Yeah, and like you mentioned, you have to work with the state, city, county levels. How is it going for you in that space? Is it easy? Is it more bureaucratic? Or is it the biggest part of your hurdle in launching in a new market?
Um, it depends. It depends. And I think something you had mentioned when we spoke last was the power of relationships. I'm
Yeah,
always reminded the most important thing you do is pick up the phone and call.
yeah.
They're regulators, they're compliance people, but they're people. And many of them are willing to help you understand where the gray area can be better clarified if you reach out. So that's been a lesson I've taken into this.
Yeah, no, I cannot stress enough on the power of relationships. Also, because they might be just following protocol and doing their work,
Yeah.
their expected responsibility, right? So there should be some way where we are able to connect with each other, and it's not going to be on emails and text
Yeah.
messages. Uh,
Very
I've
true.
done that. Yeah. Now, with this latest edition of Shuttlebee, if I may, what's
Yes.
one assumption you had early on that turned out to be wrong in this new version? Have you changed assumptions? Have you pivoted lightly?
I think I describe the program the same, but it's a substantial pivot.
Mm,
I think one major pivot after building the insurance piece was investing in individual operators. Um, Having had the opportunity to work with a network of 1,000 operators, they're not all cut from the same cloth. They all have their differentiation as well, and I think it's a beautiful thing. So I think instead of trying to unify and uniform everything and everyone, a pivot I've taken into is really empowering different carriers to own their diversification and provide them with the tools, best in class technology that we can purchase at scale and offer to an individual operator, but then allowing them to carve out their own path in terms of the service levels that they want to offer and the types of service, and really giving people the tools to build that from the ground up, I think is powerful and transferable to this activity or whatever business they decide to build next.
yeah, exactly. And as a startup now, Do you capture any metrics for your own growth and progress apart from what you do for your clients? I mean, how do you know that you're on the right track, you're growing in the right pace, you're ready to launch? I mean, what are some metrics that's important to you?
So I think as a founder, my own personal set of metrics, I think you're the second person in the last couple of weeks to challenge me on this. But somebody had asked, are you reflecting on your progress? Do you look back and say, this time last year, X? And my answer is no, I don't. I don't do that nearly enough. So my own personal set of metrics, I'm working to build. When it comes to the business, every category has standard KPIs, and it's hard as an operator to remember you don't need 30, you maybe need 3, right?
Yeah.
So I think I'm at the less is more stage. What are the 3 leading
Mhm.
indicators, and why do I feel so strongly that they're leading, and being open to changing them or shopping it around and getting feedback. So all in all, with the beauty of AI, so much is reportable, more than we've ever needed to. It's almost information overload. But getting clear on what really matters and filtering out the rest has been, probably my journey in the last couple of months.
Yeah, no, exactly. So that's exactly what I talk to with my founders and investors and operators in my network, right? So we need to track only those top two, three things. I mean, metrics can be overwhelming, but
Yeah,
if you are spending most of your time trying to capture metrics, then where do you spend time growing your business or reflecting on your personal journey
right.
to get ahead, right? So, yeah, very true. Trying to track those that matter for you and for your business is the most important thing. Now, does your model become stronger as more operators and data come in? I mean, where do network effects show up?
So I don't have the exact number, but there is a moment where we overcome the law of small numbers and start enjoying the law of big numbers, right?
Yeah.
Statistical significance, right? So in the beginning, we are fragile, from that perspective, and we plan to apply the same diligence before and after, but we will really be, walking before we run to ensure that we are delivering 100% on safety. So, all this to say, there is an inflection point at which, um, we will change our approach just because we've entered scale.
Mhm.
But it's our intention to keep our vision and our, to operate with the small company vision, even as we grow past that inflection point.
Yeah, exactly. And sometimes these days, founders always want to fundraise to get traction and growth. But I truly believe get some traction, try to be self sufficient with your own revenue. And then when you have proven your model a couple of times, then you can probably fundraise to scale or do whatever you need to, right? Now, you've been through accelerators at Goldman Sachs, at RevTech Labs, and so on, right?
Mhm,
I
yeah.
mean, what are some benefits of going through some of these accelerators? So many founders think they may be not so sure about getting into an accelerator. Their time is well spent on their business. So, do you see any benefits in this? What would you recommend to another founder?
Yeah, so lots of benefits. Um, Definitely some drawbacks. No, there's no perfect scenario. I think if I were able to take away one piece of due diligence that I would insist on is, to the very best of your ability, find somebody that maybe that you have a connection to, but ideally that who has gone through that program.
Mm,
Program's going to change and evolve, especially if it's been a while. But really, it's about who's putting that program together, and what are you investing in? What in that program will advance your mission? If you can't come away with a really strong answer for that, it's not the right thing. And we did go through accelerators. We definitely declined accelerators. We were rejected from more accelerators, right? So
yeah.
it's a personal wager, and then once you make the wager, you just need to be okay with the outcome, however it plays out. But again, it's a brilliant opportunity to get network with other founders. And to me, that's almost the greatest value out of these programs.
Yeah, exactly. So founders need not compete with other founders. Your companies could have competing solutions, but a
Yeah.
lot of founders rely on each other in their journey because everyone is going through the same thing, maybe slightly differently at some point in time. And also getting into accelerators or programs like that, you need to know what you want to get out of before you sign up, right? So if your objective is different from what the accelerator offers, then obviously there's going to be a disconnect.
Mhm.
Now, how do you network? I mean, you mentioned about having this networking and connection with other founders, but when you're gearing up towards fundraising, maybe sometime next year, sometimes founders think, okay, I want to fundraise next month. I'm going to start emailing investors this month. Is that the right approach? What do you think, or you're yet to think about that?
I'm more curious about your thoughts on that. I'll give mine quickly, and then I want the real answer. Yeah, so it's a relationship business, and at the end of the day, there's a lot that of positive outcomes that can come out of those relationships. It's not always an investment. Sometimes it's
Yeah.
better than an investment. So if, like you said earlier, if you view it as transactional, you you, you may be successful, but you're not going to get those partners or stewards of your vision in your business that you would if you took real curiosity into what other people are doing and why they invest and what their thesis is and how they see their role in their portfolio companies. So, but yeah, what have you seen that has worked? I'm looking for the answer here.
No, I 100% agree with you. As an investor myself, I can say that investors talk to each other. It's a ecosystem that kind of heavily relies on trust, warm
Yeah.
connections, introductions, not necessarily from another investor. It could be from another founder. So when founders are shopping for investors, investors are also shopping for the next best deal or startup in their portfolio. So they would potentially talk to, let's say, one other person who was a founder in your accelerator cohort to learn more about you, because they can always learn about your business from your pitch deck,
Mhm.
right? They want
Right.
to know more about you as a person, because many ideas fail not because of the idea, but the person executing it or the team that's trying to deliver the growth. So 100% agree, it's a relationship business. And definitely, if you are connecting with an investor, they may not give you the investment, but they may direct you to someone else who may direct you to someone else who could be that
Right.
investor. But start early and don't have an agenda in mind, right? Build those relationships so that when you really want to fundraise or need something, you are not trying to, be transactional. Because if you
Yeah.
want to run this for the long term sustainably, then building relationships is the best thing. It cannot be through emails or transactional one time pitch deck and things of that sort.
Yeah. Uh, Great motivation to get out there. Right. Thank you.
Yeah, exactly, exactly. So sometimes founders think, okay, I don't have any investors in my network, but then you can start meeting, going out, and you don't have to spend too much time networking. But then you need to do some networking so that you are out there. People know that you are a person and you're doing something
Mhm.
great, right? So balance your time, see how much time you want to run your business, but keep the long term vision in mind so you can start networking. I think uh, sometimes founders think, okay, instead of networking, I can probably spend time building my product. But then to even to get the product in the hands of potential customers or partners, you need that networking to
Right.
work, right? So that's what I've seen so many times.
Absolutely. It's been my experience as well on both the positive and the, oh man, I really wish I had worked a little harder at this event or gone to this meetup. So it goes both ways, but absolutely.
Yeah, yeah, exactly. Now more than ever, it's more important. Now, 5 years from now or 3 years from now, how do you think risk will be priced differently across mobility and logistics?
Oh man. So, you know, obviously, I expect everyone to adopt our model and put operations and compliance under insurance under the same umbrella, so that you're not throwing activity over the wall and you're benefiting directly from your stronger risk profile activity. But I think it's just going to get more nuanced, just like we see prospect level pricing at the personal level. I think we'll see prospect level pricing at the commercial auto level as well, especially with the introduction of AI, the vast amount of data we can collect. I think it's just going to get more precisely matched between the activity, your risk profile, and the risks that you're looking to cover.
And I may be a little bit too early here, but are you planning to stay only in student transportation? Or is this use case applicable across other sectors? I mean, one thing that I can right now think immediately is healthcare and other
Yeah.
aspects, right? Especially if people have challenges to get to some of the healthcare facilities that they have to get to or things of that sort. So, uh, I mean, is this use case usable across multiple sectors?
Yeah, you're hired as our product strategy person. Welcome to the team.
Thank you.
Uh, as a founder, I think we've been really focused on keeping our scope small in the beginning, and I like to do the hardest thing first, right? Because once you've
Mhm.
done the hardest thing, everything is a little easier. I think the
Yeah.
hardest thing I've actually experienced so far is, hey, we heard you do commercial auto. I'm in this other space. Can you help? I'm in the paratransit, or we run tours, right? So this is a pain
Yeah.
point that a number of folks who have commercial auto struggle with,
Yeah.
especially those small carriers. So I think it's going to be really important to stay focused. And then when things go according to plan, there will absolutely be a point where we look at the options in front of us and decide which path is best. So
Yeah, I mean that's
yeah.
that's the perfect answer because I've seen so many founders trying to build something that can address multiple channels, multiple types of
Mhm.
customer profiles, and multiple use cases. But that's not how you want to prove your early stage traction, right? So you want to pick
Right.
one or two channels, one or two profiles, like how you said you've chosen three different markets
Mhm.
to operate and scale. And once that's successful, then you can obviously extend. But that's also a great lesson. You can have the long term vision, but stay focused on the short term traction and success with limited channels and customer profiles, right? So I think, yeah, that's a great idea. Now, how do you think about go to market when you want to, even for the three markets you have chosen? You
Yeah.
have the market, you have the network, relationships, you have the solution, but then something else has to happen for this to really execute, right?
Yeah. So there's two paths that we'll grow into. Path one, organic marketing in the space is really powerful. Camps, schools, parents, they all talk to each other, right? So proving yourself out well in a market, going from 0 to 1 is challenging, but once you're in
Mm.
market, that network effect takes hold. So, step one is deliver operational excellence, right? With whoever is your early adopter. But then step two is channel partners. There's folks who know this space and talk to the folks who are purchasing and do this for a living, and they're very good at it. So as we evolve as a company, I see us going in that direction. But starting scrappy and small is always my way. So that's where we've started with organic marketing and traditional low cost, high impact go to market strategies that are more direct. So
Yeah, in early stage, you don't want to spend more money in acquiring customers and getting the word out, right? Organic word of mouth is the
yeah.
best thing that can happen in early stages. Now, I mean, we can keep talking, but then I know we are also coming up time. I have one last question for you. So, if Shuttlebee succeeds at scale, what
Mhm.
fundamentally changes for operators, insurance, and families relying on these systems? You've succeeded at scale, but what happens to these other people? What fundamentally changes for them?
So I think the daily customer journey for a parent is that their kids take the Shuttlebee to school, right?
Uh,
It's just the approach where you go, you book your operator, you form your group, and you move forward without this education layer that has to happen right now since we're a new entrant into the market. So overall, it really becomes more of a mainstream idea approach and less of a nuanced new thing that AI has enabled and insurance companies have brought to life. So I don't know if that's the pinpointed answer you're looking for, but in a nutshell, we just want this to be a common household name.
Yeah, I mean, that's exactly what I was looking for. It becomes second nature, right? Meaning, as a parent, I don't have to think about, okay, what's going to be my transportation option? Should I compare, evaluate,
Yeah,
check what are the pros and cons? Rather, okay, I have to get my kid to school or to after school activity. Okay, I get to Shuttlebee and start working, right? It
right.
becomes second nature. There is no alternate thinking. So thanks so much, Kristina, for sharing your time and expertise with us. Is there any last words you want to share with our audience? How can people get in touch with you? What are some things you're looking for from someone?
I am always open to introductions to customers who could be potential customers. If you are that person and you don't mind giving me a little bit of your time, my email address is, well, you can send it to our general one, which is hello@getshuttlebee.com. This has been fantastic. I'm so grateful for your support of the entrepreneur community, and I look forward to our next conversation. Thank you.
Thanks so much, Kristina, and good luck with your launch. And
Thank
thanks
you.
everyone for joining us. And if you're a tech startup, like I earlier mentioned, any industry, sector, or stage, check out the fundraising mastermind program. Next Cohort is launching next month in about 3-4 weeks
Okay.
on May 20th. And all details are available on the website at the link scrolling below. Thanks again, Kristina, for taking time to join us. And thanks again, everyone, to watch us.